Hello and welcome to this episode of Focus on Amakinyo Bakeye. On this episode, we'll put a spotlight on the third edition of the Emerging Africa Group Africa Capital Market Report, which looks at the key metrics for growth for 5 key African markets. Despite a challenging 2023 for global economies, the Emerging Africa Group believes 2024 holds a more positive outlook for major African economies. Many analysts believe the turbulent period for most global economies is over. They say the scenario is similar for most African economies. Therefore, there is a need to provide some guidance to new and old investors. For the Emerging Africa Group, preparing a detailed third edition of the Africa Capital Markets is timely and in tandem with global forecasts. The report highlights key issues in the world and what poses a challenge to sustained growth, as well as the potential of African economies.
A challenging path to recovery awaits the world in 2024 as it faces multiple risks from geopolitical conflicts, environmental crises, and the aftermath of severe interest rate increases that could dampen the global economic outlook. Despite these challenges, some of our African economies are expected to perform well in 2024, according to the IMF's predictions or projections, with 12 African countries coming among the 20 fastest growing economies in 2024. Nevertheless, structural challenges, currency fluctuations, and high fiscal pressure are among the obstacles that will cap Africa's growth and recovery in 2024. Beyond the data presented in this report, we see potential waiting to be harnessed on this continent. Hence, our commitment to presenting the Africa capital markets to the world through this series.
Africa has continued to show resilience, and we saw it across and most of the economies where we saw these economies growing beyond expectation. For Central Africa grew in 2023. However, the growth was subdued, and this was as a result of the high inflationary environments, as well as some of the political instability that will be experienced in that region, particularly in countries like Central Africa and the Democratic Republic of Congo. Likewise, in Southern Africa, we saw similar pattern. South African economy has continued to drive the region, being one of the biggest economy evaluated. And we saw that Southern Africa grew by just 1.6 in 2023, according to the African Development Bank, against 2.8% for 2022. The inflationary pressure was also one of the key issues strategies that region faced in 2023. Then for Northern Africa, it was also similar. The sub-countries countries like Egypt facing severe inflationary pressure, with food inflation rising at as over 70%, and climate change challenges also. This also dragged the growth for Northern Africa. And we saw Northern Africa growth reducing from 4.7 in 2022 to 4%. East Africa, the fastest growing economy region in Africa, also suffered a decline in its growth in 2023, growing by just 4.1%. However, the performance was mixed as some countries recorded increased growth, while some saw a decline in their growth. However, inflation also affected this region and it impacted the growth of that region. In 2024, many African countries will be growing, and for our report, we'll see that most of African economies will be growing in 2024, and of the 20 fastest growing economies in 2024, 12 will come from Africa. Inflation is expected to persist. However, he would expect that inflationary pressure will begin to decline, but some countries will still continue to experience double-digit inflation in 2024. And this will be as a result of some structural issues they are facing within the country. For example, Nigeria, this will be because of the effect of the three reforms we saw in 2023, as well as some of the other structural issues we are battling with. Then central banks will continue to react, and we expect that we might still see some rate hikes at the beginning of this year. And towards the end of the year, central banks might need to reduce the rate hikes. Then the political environment in 2024 will be challenged. About 19 African countries will be going to be polling units. And so it is expected that in some economies, incumbents are bringing there's a shift as a result of dissatisfaction, which could also bring a different tide to how inflation be done in Africa, like we saw in Nigeria, where we saw a third party being one of the dominant parties for the election.
With such a breakdown on the 5 African economies, stakeholders in the African investment landscape speak to the relevance of the report in attracting investments.
GDP of Africa, $2.8 trillion. And they said, okay, these 5 countries, what is their GDP? So one, I looked at, okay, Egypt had the highest figure, 398 point. I think $0.3 billion dollars, followed by Nigeria, very closely 390, and then followed by South Africa. And then the next country among the list of 5 is Kenya. Kenya is number 7 in Africa. And then Ghana is number 11 in Africa in terms of nominal GDP. So I added those 5 and then found that the 5 countries selected in this report account for 45.37% of the GDP of Africa. And they said, okay, that means if I'm an investor, for that duration of this, and I'm specifically invest in Africa, number one, is there sufficient information here to excite me about opportunities for investment in Africa? I said, yes, it ticks that box. They're talking about where to go. And naturally, for investors who want to see which countries are important to start with, then, of course, which capital markets. And then you look at the size of those economies. If you go to these 5 countries, and that is where you stake your investment, all right, it means that we are already in close to half of Africa. So that's the story I came out with. So that also told me that the countries covered must have been carefully selected. And they give us a very good idea. And that is to say, if out of the top 3 African countries in here, how honored that are also important in terms of reforms and in terms of what they are achieving with respect to the rate of growth and attractiveness to global investors. That means these 5 countries selected and, of course, analyzed it. And those any investors that look at Africa will necessarily consider.
It's very holistic, but at the NGX, the Africa Exchange Linkage project is very key for us because we think that as a market, we could gain more by integrating the African markets across all the various segments from the Albifold, Francophone, East Africa, and Southern Africa. So that's really what we have seen in this report. It tries to mirror all the markets across Africa. And 4 of the key markets that are highlighted in this report are also members of the African Exchange Linkage project. And data that we'll see here will certainly help investors. So what we're trying to do is to allow investors to trade in a seamless manner across this African market. So with this sort of report, it gives them the data required to make such investment decisions. I would think that capital mobilization is better when markets integrate, especially the African markets. That is a bit too fragmented, but we think that market information and data will really help investors to narrow that and find out where the real value is.
Imagine Africa has, over the years, interfaced with investors, and according to Toyin Sani, many of the investors consider Africa as an investment destination.
We have found that because in the course of our work, we interface with international investors, regional investors, and domestic investors. And many of these investors want to consider African markets within the context of the peer markets and the alternative opportunities that they have to invest in this market. So we've started this year. We have looked at Nigeria, we have looked at Egypt, we've looked at South Africa, we've looked at Ghana and Kenya. And the intention is to look at, first of all, the macroeconomic, the political issues, geopolitical issues that are driving the direction of these economies, and then look at the impact of these issues on factors like inflation, on, very importantly, also the segments of the market, the equity market, the fixed income market, the foreign exchange market, and on issues like infrastructure investments and how that or the death of it is impacting how these markets are performing.
The group, in its efforts to deepen the African markets, recently launched a $15 million technology fund. They shared what to expect with the fund.
We've already launched, a technology fund. And so it's live now. It's a Mauritius registered fund. We're licensed with the Mauritius FSC. We have the fund management entity and also the fund. And, we've, fundraised quite a bit in terms of first level commitments. And, we're also still in the process of fundraising, but more importantly, we're also in the process of deploying funding towards startups across Africa. It's a fund that is focused on I would say 5 major African countries across. So that's, businesses across Nigeria, Ghana, Kenya, and Francophone West Africa, which is a region that we've seen has often been overlooked by fund managers within, the sub-Saharan African region. So we're going to focus on Francophone West African countries, including Ivory Coast, Togo, and Cameroon as well. I think also important to note is that this fund also has a gender lens focus. So we're going to commit quite a bit of the committed capital. The fund size is going to be deployed towards female-led and female-owned businesses as defined by the DIFC's 2X initiative. I think it's also important to note that, it's a USD domiciled fund. And we're really just hoping to help a lot of startups across Africa really achieve their early stage and growth, really fund their early stage and growth capital needs.
The Imagine Africa Group says it has positioned itself to guide investors regarding investments in Africa. The continent looks forward to impactful and meaningful investment across the African market. Well, that's all on the episode of Focus On for today. I'm Akin Obake. Until next time, bye for now.